Welcome to the Innovators and Investors Podcast. I'm Kristian Marquez, founder and CEO of FinStrat Management. At FinStrat, we provide CFO-led accounting, finance, and reporting services to assist clients monetize their business. Stick around to the end of the podcast and I'll share how you can be our next guest. Now on to the show. Hello, and welcome to another episode of the Innovators and Investors Podcast. I'm your host, Kristian Marquez, founder and CEO of FinStrat Management. Super excited because today we have with us Rick Lasch, who's also not only a professional investor, but also a founder, and today heads his family office. Rick, welcome to the podcast.
Thank you, Kristian. It's great to be here and with you.
Excited to have you on and give our audience a benefit of gaining your perspective. So why don't we start with Medical Reliance Group, which I know is the company that you founded almost 2 decades ago.
Yeah, that's a blast from the past. Medical Reliance Group was a combination of some companies that were providing different services to the healthcare community. Originally, it started mainly with medical staffing. And as we started to identify opportunities within the healthcare landscape, particularly around reimbursement and quality oversight, we formed supporting companies around that and brought them under the umbrella of a Medical Reliance Group to better service the community as a whole.
And if I recall correctly, 2 of those companies, one was Medical Site Reviewers, and I have to refresh my memory on the second one.
Medical Verification Solutions and Diversified Medical Staffing were the 3 companies that made up Medical Reliance Group.
And so it's interesting. It'd be great if you can share with us how the Medical Site Reviewers ended up becoming, if my understanding is correct, the prime focus of Medical Reliance Group from a revenue perspective.
In 2003, the Medicare Modernization Act was passed, and that had a profound impact on the way reimbursement took place for Medicare. And in that setting, the country was divided into regions. And in order to properly identify the risk and therefore the cost associated with the populations in those regions, beyond claims data, beyond lab data, there was a need for sometimes an in-depth look or just even a look at a patient's medical record to truly ascertain the risk. And in this landscape where reimbursement was becoming more tied to clinical and quality outcomes, Medical Site Reviewers had built a sophisticated and scalable system and operational process that allowed it to collect this, call it analog data, in a very efficient way and make it digital. And I feel silly explaining it to you on the screen. I'm sure it may be helpful to some of the listeners, but you were a huge part of helping build and develop that system over time.
And so regulations change. You see an opportunity to take advantage of a service that you now provide. It'd be great to hear, was it an immediate realization, or what was the process by which you started to realize that it made a lot of sense to really invest in this one particular business?
Oh, it's probably cliche, but listening to your customers. If you can listen to your customers, you can identify real need. Unfortunately, it seems even more and more today, companies try to build this great brand or idea, strategy, whatever, and then force it into this box that they think the customer represents. And so I thought our organization did a really great job listening to what our customers needed, translating that into opportunities that our company could then take advantage of. I think that's probably the biggest part. And it goes without saying, Kristian, when we were a young company and started to really identify the breadth of opportunities ahead of us, the challenge of scaling to meet those demands was real. How do you hire this many people? How do you develop these many systems? And It was at that time that we also sought outside professional consulting advice. And that was a process that requires a lot of careful consideration. And thankfully, we were able to find a consultant that wasn't so much a Rolodex or academic theories. They were roll your sleeves up, line up beside us, and while bringing some advanced business planning techniques, financial management techniques, they also were a true partner, so much so that we ultimately joined our two companies and went on to become a new company named MedAssurant.
And so a whole bunch to unpack there. One, for the benefit of our founders, is this reoccurring theme that we have on the podcast where we still find business owners out there who have this mindset, if I build it, they will come. Or on the contrary, it's just like your experience, it's just not the case. In really understanding how your buyers are, what their problems are, and what they're willing to exchange money for, it's just key.
It
Um,
seems so simple, but it's easier said than done. And look, everything's a bell curve, right? So there are situations where you're in a build it and they will come scenario. I've been a part of a couple where that's actually a strategy. But vast majority of situations, you're exactly right. I think if you are truly in tune with your customers' needs, you will be a growing company.
100% agreed. So, also really unique for the podcast is a merger. Most founders think about just getting acquired versus joining forces with another organization. When you were presented with the opportunity to combine forces with another organization and you saw the greater enterprise value, obviously that came with the consequence of dilution. So, I would love to understand, how you thought about this.
Oh,
And
dilution, and I accepted a different role within the bigger, corporation. Look, I'll take a bigger piece or a smaller piece of a bigger pie. You can own a whole piece of something, but if you see a path, I think most companies that are going to make it to a unicorn status or scale to in excess of a $1 billion enterprise valuation or billion in sales, pick the metric, more often than not, you're going to want to have the ability to digest these strategic opportunities because sometimes you feel like you're giving up, but you're really gaining. That's even stronger in scenarios where more than, let's say, a financial component's being brought to the table. There's a complementary skill set, relationships, experience, all of those things factor in. So while I encourage founders to be really stingy with their equity at all times, but therein also is a great opportunity because the power of that equity should be able to provide you with the gunpowder or the working capital that you need to bring in additional partners and into the strategy.
so, spoiler alert for our audience, though Rick alluded to it, it ended up creating a unicorn valuation in the years to come. And so, on the path to what was ultimately a multi-billion-dollar IPO, would love to hear your perspective as the company, you were building the company. How do you think about balancing the needs to ensure that your top line is growing, but that you're also putting in place operations that can scale and maintain quality services?
We used to joke, right, that we were installing the headlights into the car that we were building, driving 80 miles per hour down the road at midnight. It's a balance. It's a really tough thing to balance, but if you think of a focus just on the top line, it will become a house of cards pretty quickly. Somewhere in there is the balance. Meanwhile, I've also seen many organizations die from paralysis from analysis, where they just can't feel like they've got the system exactly how it needs to be, either to go to market or to scale it. And oftentimes you miss a window of opportunity for the growth or the market share that you need to sustain. I don't think one is better than the other. If you have to err on the side of getting a sale, your word is only as good as you deliver, and there's nothing gained by selling something that you can't deliver. But if most companies waited to be perfect before they started to sell and deliver their product or service, they wouldn't last very long.
Yeah, I think it's a fantastic point. Arguably, it's a concept of an MVP, minimum viable product. This idea that I have seen a lot of founders who have this specific vision and just don't appreciate that. Hey, you can get there, but you still have to be in the market, selling, learning, grabbing market share in order to move things forward. And so with that, whether it's a product or a service, people are crucial. By coincidence, I happen to know a lot of the people who helped build the company, but we would love to hear your philosophy on how you went about attracting and retaining great staff.
Yeah, that really is the core of it, Christian. And there's different management styles. I like to refer to the cinder block wall of those big mortar bricks and then the cement that kind of holds all those bricks together. And it's not a pretty image, but I tried to emulate that mortar between those solid bricks. I'm here to tell you many years later, and I think I was willing to acknowledge it at the time. I wanted to surround myself with people that were better than me, that were had different skill sets, complementary skill sets, and had the work ethic and the character to build the company to the point that I thought it could reach. And through that process, you have to have a level of, self-confidence and security. We didn't get into the details, but as we formed that initial merger, I stepped down as the CEO and held a couple different roles. I remained on the board. And part of that process is, in my opinion, it worked out great for me. And that was a recognition, knowing that there might be someone with a different skill set or has a couple different capabilities at this particular time that are better to lead the company than me right now. And it's not an easy thing to come to terms to. If you're a founder, you've obviously have a lot of initiative, a lot of creativity, a lot of work ethic. And I've seen it, unfortunately, stifle a company. A company can grow to a certain point, and because the founder thinks that he or she are the only solution or the only one that can make these decisions, it tends to peter out. So it was a big dose of humility, and I'd like to think like a mensch-like strategy to where if you're comfortable to surround yourself with people that have different skill sets, better skill sets. There's a lot of power that comes from that.
It's probably a white paper in and of itself, but you hear stories, as you point out, of founders who are able to get a company to a Series A to Series B, but then maybe should have stepped aside. Obviously, hindsight's 2020, but I'd have to say kudos to you for recognizing that what your strengths were and then being able to apply them and allow other people to step in to other areas. I think that's really valuable. And it's not, I don't think, I feel as if it's not as often as you hear about it. And again, that's why I reference a white paper. I think this is a great example of where a founder should genuinely reflect that if for whatever the reason they think they need to bring on a different team, hey, here's an example audience where it resulted in a unicorn valuation after the fact.
Yeah, it comes down a lot of times like people would refer, that was your baby. No, my baby lives in my house. A company is a collection of assets and people that work together to maximize shareholder value. And as a founder, remember that your value in a financial sense is really that the equity that you hold. And if you want to value other things more than that, which maybe sometimes you should, okay. But by maximizing the team and the capabilities around you, you're really able to move the company forward on all fronts.
I think it's great insight. And so with that, a tremendous amount of not only experience, but success as a founder and as a business owner, and now focused running your family office. Now, would love to hear your perspective on investing and how having been a founder has influenced that.
Yeah, thank you. I'm not a sophisticated investor per se, and the vast majority of what takes place within the office's portfolio is professionally managed. I, for one, uh, like the art of the deal. I like the not so much startup, but I like the growth stage company. I like a company that's trying to scale. And as I mentioned in the past, success is being able to find those people that you can surround yourself with that complement your skill set. And so while I don't really get into a lot of the number crunching on the diligence, I like to call it the quantitative diligence aspect of a deal. I like more the qualitative. Where are, in terms of a total addressable market, does this jive? The things that you can't really put a finger on with a calculator or an Excel spreadsheet. And probably the biggest part is the management team. So when I'm looking at new deals, the deck, it's just gonna, the content of the deck is important, but also the look of the deck. You can tell what stage of a company and what type of management they have by the quality, by the theme, just by the look of the deck. And it sounds shallow, and maybe a lot of investors won't admit it, but I make a definite judgment call on that. And the other part is in the management interviews is where I really tried to get a sense of the level of commitment. And when I say the level of commitment, it's not the owner, it's not the founder per se. I want to see the level of the commitment between the management team to each other,
Hmm.
because you can win from time to time with one star player, i.e., the founder or a key IT person or what have you. But generally speaking, for a company, a football team, a baseball team, you pick the analogy, to be successful, it's when those members of the team have a commitment to each other to do the best, not for themselves, for the other part members of the team. And can I overlook some glaring financial pieces of a deal if they're really strong in that regard? It's hard, but if the financials are otherwise 50-50, the management team is what's going to 9 times over out of 10 lead me as to whether to invest or not.
I think there's a mind. I heard commitment. I was thinking about it right before you mentioned it, and so it totally makes sense. You reminded me of something I've shared with my daughters over the years. It's watch what the boys do, not what they say. And using something like a pitch deck just as an example is inferring their level of attention to detail and how do I thinking about this business, I think is really smart. Because when you genuinely care, it'll come out in your product and in your work. And if you're not willing to make something you're going to put in front of an investor when you're asking for their money to look sharp, absolutely, I think it makes great sense to really think about whether or not this is a group who's also going to run their business the same way.
Yeah,
Um,
another thing just before the next question that I just want to add, because I think it's really relevant for this podcast, is depending on this, is this a series A, B, another huge indicator for me is their reporting. How do they communicate with investors or shareholders? And my experience, as example with FinStrat, like you're head and shoulders above other solutions that I've used in that, in terms of crisp, clean, easy to understand, relevant reporting. I thought we did that at Inovalon. I thought that was really a key component of our growth over years, is not only were we performing these much needed and valuable services, we were reporting and communicating them very well to our clients. And in the deals that I've been in, some have been great and gone well, and some have not gone so well. And in some of the ones that haven't gone well, some of them have been able to come back and make it because they did a good job communicating with their shareholders throughout and keeping them a part of the story, as it were. And so many founders, so many companies don't capture that very important piece. And I just wanted to make sure that we got that out.
I think that's great advice. And we've heard this feedback before from professional investors who say, if you expect me to invest, whether it's now or in a follow-on round, yet you're not going to keep me aware of what's going on. It's like, what are you telegraphing to me? And founders, please take note, even if you don't get a response, giving someone the courtesy of an update is significant.
Yeah, and you can treat it like a checkbox and send out a monthly letter or a quarterly letter that, includes the balance sheet and the income statement. But if you treat it like a checkbox, your investors are going to treat it like a checkbox and they're going to stop reading it. If you put your mind and your thoughts and really your heart into it, you'll build a partnership with your investors and just strengthen your team going forward.
I think that's great advice. And so, thinking a little bit further, knowing that you put a heavy emphasis on the team and how they interact, obviously Zoom really convenient, but how strong do you feel about actually meeting face to face? Or is that just a luxury that's really difficult to come by?
For me, there's really no substitute for face to face. So depending on the size of an investment, the complexity of an investment, you're going to need face to face. Certainly, there are other situations with today's technology and Zoom and so many other tools that allow founders to share their complex business solution through demos. However, it's not crucial, but I will say that I consider face-to-face interaction to be a dying art, and that's not a good thing in my opinion.
Yeah, it's interesting. I can remember a time pre-pandemic where I think it was almost an expectation that founders would seek out potential investors and get FaceTime. And I understand that you can cover a lot more ground by hosting a virtual meeting, but I think it probably just goes back to this idea of relationships and making sure that you appreciate that, hey, if I'm going to invest, sure, some investors may be hands off, but there's still a lot of value in just getting to know who's on your cap table and making an effort to make sure that you understand how they look at you.
Yeah, and it's like anything, like friendships, it's a line. You don't want to be overbearing. It's just finding that good balance between a high level of transparency and again, Christian, this is where a lot of it comes down to the execution. If you're just treating it like a checkbox and pushing information out, it's not the same as meaningful reporting.
And so, on that, switching gears, when the office looks at professional money managers, what's the lens that you use to make a decision of whether or not you'll work with that manager?
Oh, I'm a huge Ronald Reagan fan, and he had, I think it's attributed to him, trust but verify. I'm not going to trust a financial manager unless they're introduced to me through someone already within my circle of trust. At this stage, I don't think, and I think most people in my situation are going to be careful about forming new relationships unless they're coming to you in a way where I was seeking exposure in a particular area and I need to, I'm forging new paths. If I'm understanding your question, I've built a team of professionals that have proven themselves to me. We have a high level of trust and rapport, and from that standpoint, I keep a pretty closed loop. And I'm sure I miss out on opportunities and what have you, but I'd rather have comfort in my circle of trust than the fun of chasing shiny objects and rainbows.
There's nothing like the power of a referral. And especially considering the history of professional money managers and the unfortunate, unscrupulous character out there, I would love to know when you do get an introduction about how long will you take to get to know somebody? Ballpark.
Oh, again, that's a hard thing to average out. And I want to make sure, are you asking in terms of an investment opportunity, like a company is being represented by an investment bank and they're doing a Series A and I haven't worked with this investment bank and they're coming to me, and like, how long do I need to work with that investment bank to feel comfortable about the deal they're bringing or what have you? Or I guess I want to make sure I'm answering it correctly.
That's right. So if you're introduced to a professional money manager, regardless of any deals they may be working on, is it a month, a year that you'll work to get to know that manager before you decide to do something with them?
Yeah, it really depends on the deal. So like, that's where I was going. I'll do the diligence. Like, I'm looking at a deal right now with a company that I haven't, or an investment manager that I haven't worked with in the past, but they're a name and a reputation that I feel comfortable doing the deal through them, but I'm really looking at the deal. So they're more on a checkbox. A new one that doesn't have the street cred or the reputation of that, and they came to me out of I don't know, Kristian. I don't know that I would engage. I would probably miss unless they got something really compelling in front of me to look at, and then I do my diligence. But a money manager or someone off the street bringing me a deal, I probably won't open the email.
Really powerful to network in addition to knowing your stuff, no doubt. Rick, it's been a fantastic podcast. A lot of wisdom in here. Before we wrap up, as you reflect back on the last 2 decades, and what would you tell your younger self to do different, if anything?
That's a great question to end on. But I think about that from time to time. I'm proud to say that I really don't feel like I have a lot of regrets in life. I've been blessed by having the opportunity to work with so many great people, and that taught me so much. And I maintain relationships with so many of those people to this day, and they continue to teach me so much. So it's hard to imagine. The fact is, you can't go back. And one of the things that I think is really powerful in my life today, Kristian, is I try and stay as much in the present as I can. Back building the company, those were very busy and long days for all of us involved, and I probably didn't live as much in the present. And what I've certainly come to fully accept and embrace is, even if I wanted to change any of that, I can't. The sun is set on tomorrow, and despite how much I want to try and change it or do something different, I can't. And so I really try and live in the present, not let myself get too far ahead in the future, but be mindful about my thoughts and my words and my actions to hopefully bring about the present and the future that I live today.
Rick, I think that's additional great advice. And hindsight is to your credit. You've had a tremendous amount of success. So really happy for you and appreciate you sharing that with our audience today. Thank you.
Kristian, same to you. I'm so happy to be on, and congratulations with all your success at FinStrat.
Thank you, Rick. We're count our blessings. Really fortunate. A lot of parallels to what you shared with us today, but thank you.
Thank you.
And that's another episode of the Innovators Investors Podcast. Rick Lasch, thank you. And that's a wrap. Take care, everyone. Kristian Marquez here. Thank you so much for listening to the Innovators and Investors Podcast. If you're a successful founder or an investor who would like to be on the podcast, please visit podcast.finstratmgmt.com/podcast-guest. If you've got something out of this interview, please share this episode on social media. If you know someone that would be a great guest, please tag them on social media to let them know about the show and include the hashtag Innovators and Investors. I'd love to see your posts and suggestions. We're regularly putting out new episodes and content. To make sure you catch each new episode, please subscribe to the Innovators and Investors Podcast. And your thumbs up, ratings, and reviews go a long way to help promote the show, and it means a lot to me and my team. Would you like to know more? Go to our website, finstratmgmt.com, or follow us on LinkedIn or on X. Our handle is @finstratmgmt. This is Kristian Marquez. Thank you for listening. Until next time.